Nimesh. That was very, very interesting. But now we've got a corporate conversation waiting by. JSPL reported a mixed set of Q3 earnings. Both revenue and profits were lower than anticipated, but the EBITDA and margins were ahead of expectation. The standalone EBITDA per ton improved on a year-on-year basis. The debt on the books has come down. To discuss the quarter gone by, we're now joined by the Managing Director, Bimlendra to take some questions for us. Mr. Jha, morning and thanks so much for joining in. This is Rima here. First, on the budget, there has been a big increase in the railway budget, 2.4 lakh crore, a record high. What percentage of your sales volumes comes from the railways? And is the EBITDA per ton for the railway work higher than the average?
Good morning, Rima. Thank you for getting me here. The budget thrust has not just been on railways. I think the budget thrust has been very much on the infrastructure and construction activities, around 10 lakh crores, which is far in excess of what happens in railways alone. Railways constitutes a smaller percentage of what we have as a portfolio of products for the entire infrastructure and construction market. We are almost entirely focused in that sector. And for us, this is a great budget. It is a continuation of the government policies to reinforce the infrastructure and construction space in the country, urbanization, the focus on railways and movement of material. I think all this augurs very well for steel and cement companies. And particularly because these investments require the kind of products that we produce, we are very happy with the budget, and we look forward that India, in the first 9 months, where 12% was the increase in steel consumption in India, this trend is likely to continue with the help of this budget.
Hi, Mr. Jha. Thanks for joining us. This is Pavitra. So, like you said, there has been this big push that we've seen on the infra space. So let's talk about what that could really mean for JSPL. Where do you see your sales volumes heading, because of this entire push that has come through? If you can tell us what you could end the year with, and what do you estimate FY24 looking like as well?
So thanks, Pavitra. The JSPL, as I said, is focused on infrastructure and construction. So this budget, whatever is the already ongoing momentum in the country in this space, I think this is only going to carry on for the next financial year, which is good news for us. And what we see in terms of volumes is that our volume growth is currently restricted by our current production, which we are making new investments which will fructify next year, and then we will start gaining even more from there. But whatever are our current levels of output, we will remain at approximately similar numbers, even though we have created some new world records in production, and on the basis of it, that will be an incremental improvement that we can expect. Okay. As far as the financials are concerned, the financials have to be looked at in quarter-on-quarter improvement position basis, and we have more than 50% increase in EBITDA that you have already seen in Q3. We expect the momentum to continue.
Mr. Jha, can you elaborate on that? When you say you're expecting the operational performance to continue to be higher, let's just look at the EBITDA per ton level, 11,384. I mean, sequentially, that's a huge jump. So do you see higher realizations going forward? Because Nigel was explaining to us that the surge we've seen in Q3 is primarily on account of cost savings and all the internal tightening. It wasn't so much because of higher realizations. So if higher realizations also come in, then what could the picture look like?
So first of all, you should see that there were prices that were falling. And rock bottom prices, if you take Chinese HRC prices, they touched rock bottom of $520 in the month of November. And then December onwards, particularly towards the end of December, the prices started rising. And it was on the back of coking coal and iron ore prices that have risen. Because the demand is good, we are able to pass on these costs to the consumers. So realization has improved for JSP also because we have improved our product mix a bit. And of course, we have had tightening of the costs. So our costs went down quarter on quarter by about 9%, whereas there was 1% decline in the net sales realization. So that is the benefit that you're seeing over there. As far as going forward is concerned, we are seeing that we are able to pass the cost increases in iron ore and coking coal prices in particular. And therefore, we don't have reasons to worry on that front. There may be a small improvement in margin going forward.
So can we look at, say, 12,000 a ton in Q4?
I never give forward-looking statements. You can try it again.
No, I won't. I'll pass it to Rima. I won't.
So I'm going to try on FY24 sales volumes then. Can you give us an indication with the thrust on the budget, on capex, on infrastructure, plus your production improving, what could that number look like for FY24 and FY23? Sales volume number.
So sales volume numbers, I already gave you an indication of what we are currently doing is around 2 million tons of production per quarter. We are very much going to remain in a similar ballpark number, just because our operational efficiencies are improving. A small marginal improvement gain might be there, but the sales are more dependent today on dispatches, where there are constraints on railway rakes being available, which are primarily focused on moving thermal coal around. And we are working with railways very closely in order to debottleneck that. Once that happens, I am sure that our sales volumes can go up, but otherwise it will remain at this level. Going forward in the next financial year, whereas our hot strip mill will come by the middle of the next year, there is substantial increase in our volumes will only happen when the blast furnace starts. And that will be only in the last quarter of the next financial year when we will start gaining those benefits. So our main thrust next year is going to be on the cost reduction coming from pellet plant commissioning as well as coal block commissioning.
All right, Mr. Jha, got that. Thank you very much for joining us today and taking out the time to speak with us on, where you see your outlook for JSPL. That is the management telling us that sales volumes will continue, because of the kind of thrust that we've seen on railways, on infrastructure, they can expect it to continue at a similar level. EBITDA per ton should also go up, although they are refraining from giving us, any kind of guidance on the numbers for that. We do have to take a short break.